Welcome back to Investing Talk Podcast.
Today we're looking at AMPX Technologies. The big question is it a good time to buy now?
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
We've looked through the latest financials, analyst reports, market chatter, basically everything we could find.
And our job is to give you the clearest possible picture of, the risks and the potential rewards for AMPX right now.
Okay, so where do we start? The core idea.
Yeah, let's jump straight into the core investment thesis. When we look at AMPX Technologies, it's really fundamentally a pure technology play.
Right.
Their whole value comes from superior material science. They're a leader in next-gen batteries.
Specifically that silicon anode lithium-ion area.
Exactly. There's Secor and Cymax platforms. That's the key.
And what makes that so special? I mean, lots of companies talk about better batteries.
Well, it's not just better. It's about solving a really old problem in battery chemistry, that issue of silicon swelling when it charges and discharges.
Ah, okay.
Their tech uses a silicon anode structure that dramatically boosts energy density, like way more capacity without the usual breakdown problems.
That sounds like a pretty strong advantage, a technological moat, really.
It is, and that advantage is showing up directly in their top-line performance.
Because this higher energy density makes them essential for certain markets.
Precisely. Think high-value, high-performance areas like advanced aviation, commercial drones, maybe even high-end EVs down the line, markets where standard batteries just don't cut it.
And you can see that demand reflected in the revenue figures.
Oh, absolutely. They are just blowing past sector peers. So the company reported 2024 revenues of $24.17 million.
Okay.
But the key thing isn't just the number, it's the acceleration. That's a staggering 166.95% jump year over year from 2023.
Wow, 167%.
Yeah. You just don't see that kind of explosive growth unless you have something the market is desperate for right now.
That kind of growth is incredible. But it's top line, right? How do we square that with the fact they aren't profitable yet? Not even close on gross margins.
Well, the market seems comfortable with it, for now at least. That's clear from the sentiment.
What are the analysts saying?
If you look at the consensus, you've got 7 different research firms all maintaining a strong buy rating.
7 analysts. Okay.
That signals real confidence, in their ability to execute and basically dominate this emerging space. The bet is that grabbing market share and proving technological leadership today will lead to profits tomorrow.
All right, so the market's betting on the future. Let's dig into that financial picture more deeply. Balancing that confidence against, well, the cost of funding a fast-growing tech company.
Right, the financial health. Despite the rapid growth, the good news here is they actually seem really well capitalized for a company at this stage.
How much cash do they have on hand?
As of the end of September 2025, they had $54.2 million in cash and equivalents.
Okay, that's a decent cushion.
And $76.7 million in total equity. So yeah, it's a significant cushion. And for you, the listener thinking about investing, that cushion matters because it helps buffer the inherent operational risks involved in scaling up so fast.
But we can look closer at their ability to handle immediate financial needs too, right?
We can. Their liquidity looks excellent. Check out the quick ratio. It's 5.4.
5.4. What does that mean in simple terms?
It basically means they have over $5 in readily available assets for every $1 of short-term liabilities they need to cover quickly.
That's very strong.
It's not just good, it's a huge safety net. It really de-risks the investment quite a bit, even when you factor in their aggressive spending.
Okay, but now the flip side, the profitability question. We can't just gloss over the losses.
No, definitely not. They are running deep in the red. 2024 saw net losses increase, hitting negative $45.40 million.
Minus $45 million. Why should someone looking at this stock be okay with that kind of burn rate?
You have to put it in context. These kinds of losses are actually pretty typical, maybe even strategic for emerging tech leaders like AMPX.
Strategic losses. Explain that.
They're intentionally running a deficit right now. They're investing heavily in scaling up manufacturing, building out huge capacity. Plus, they're pouring money into R&D and capital expenditures.
All to stay ahead technologically.
Exactly, to maintain that lead. So that recent quarterly EBITDA number, the negative $5.8 million, it isn't necessarily a sign of failure.
It's the cost of innovation and growth.
It's the steep price of trying to win the race for market leadership in this critical technology. So, yeah, the key takeaway is the losses are big, but they seem manageable because of that substantial cash runway.
So they're prioritizing dominance and market capture over making a profit today.
That seems to be the strategy, and connecting this back, the current market valuation is clearly rewarding that future potential and their leadership in advanced batteries. It's like investing in a strategic asset, not buying based on current earnings.
Okay, that makes sense. Let's pivot to the stock itself. The technical picture seems to really back up this fundamental story.
It does, beautifully. The stock's resilience has been, well, pretty outstanding.
It bounced hard off its lows, didn't it?
Sharply. It went from a 52-week low of $1.21 all the way up to recent levels around $11.84.
That's a huge move. Requires serious buying interest.
Sustained, massive accumulation, yeah. And from a chart perspective, those gains actually look pretty sustainable.
How so?
The stock is trading clearly, definitively, above both its 50-day and its 200-day moving averages.
Which confirms.
A clear, sustained uptrend. This isn't just some random speculative spike. It looks like a healthy trend reversal that's holding.
What about momentum indicators like RSI or MACD?
They look healthy too. Both the RSI, the Relative Strength Index, and the MACD show strong accumulation. But crucially, the stock doesn't look massively overbought just yet.
Meaning there could still be room to run.
Exactly. It suggests there might still be considerable upside before it hits those really speculative, frothy levels.
So where do the analysts see it going? What are the price targets?
The consensus for 12-month targets goes up to $17.17.
Which from around $11.84 is... what, about 35% upside potential?
Roughly, yeah, nearly 35%. And beyond that, the chart consensus points towards a likely trading range over the next 3 months between, say, $10.50 on the low end and maybe $16 on the high end.
So the technicals are definitely lining up with the bullish story.
Strongly reinforcing it, yes.
But for a high-growth stock like this, what really makes it move are catalysts, right? Specific events.
Absolutely.
Yeah.
Near-term catalysts inject momentum, and AMPX actually has a pretty packed schedule coming up over the next few months.
Okay, what's confirmed? What do we know is happening?
Well, first, there's the ongoing discussion around the Q3 earnings details. They came out November 6th, but the market is still digesting them.
What are people looking for there?
Investors are laser-focused on margin trends, any signs of improvement, and, really importantly, new contract wins, especially in aerospace. That whole digestion period is still influencing the day-to-day price action.
Okay, earnings digestion. What else?
Then there are market mechanics. You should definitely put November 30th, 2025 on your calendar.
Why? What happens then?
That's when sector ETF rebalancing is scheduled. These kinds of events often force certain institutional funds to buy shares just to weight their portfolios correctly.
Forced buying pressure.
Can ignite trading volatility and bring in strong buyers? Yes. And separately, keep an eye out for major institutional buying activity, maybe around mid-January 2026. That often happens with yearly fund rotations and managers taking new positions.
Okay, confirmed events. But then there's the really interesting stuff, the speculation, the rumors driving sentiment.
Right. This is where it gets potentially explosive for the stock price, though you absolutely have to remember these are unconfirmed.
Understood. What's the biggest rumor?
The loudest chatter is about a potential strategic partnership announcement. The word is they might team up with a top 5 large aerospace OEM.
An original equipment manufacturer.
Yes, to supply batteries for next-generation UAVs, unmanned aerial vehicles.
That would be huge validation.
Massive. It would likely trigger a very steep price jump if it happens.
What other whispers are out there?
We've also heard pretty persistent market speculation about them landing a multi-million-dollar defense contract.
Also for drones.
Seems likely, yeah. Tied to batteries for military drones needing extended operation times. That super high energy density from their CIMAX platform makes them a natural fit for government contracts where mission length is everything.
Makes sense. Any other big rumors?
The third major one is about an R&D breakthrough, and this one gets the tech investors really excited.
Okay.
Speculation suggests the company might be really close to commercializing cells that can achieve over 500 watt-hours per kilogram energy density, possibly in early 2026.
500 kg. Put that in perspective.
Commercializing something at that density would give them an almost unbeatable technological lead. It's the kind of breakthrough that totally reshapes the market.
It would likely cause a major re-rating of the stock.
Far beyond current analyst targets, most likely.
Yeah. Okay, lots of potential upside, lots of excitement. But we have to balance that with the risks.
Absolutely. Despite the bullish outlook, this is definitely not a stock for the faint of heart.
What's the #1 risk investors need to grasp right now?
I'd say it's the volatility. You have to talk about that. The stock has a really high beta 2.9,
Leaving.
meaning for you, the investor, when the overall market, like the S&P 500, moves 1%, this stock is theoretically expected to move almost 3%.
And that works both ways up and down.
Exactly. High volatility needs a strong stomach and good risk management, no question.
And the other key risk goes back to the financials, right?
It does. Execution risk. They're running these big deficits on purpose to scale up. The danger is they fail to execute properly on that manufacturing ramp-up.
Or the rumored contracts don't actually happen.
Right. And then they burn through that $54 million cash cushion faster than planned. They really need to successfully turn that tech lead into actual market dominance before the cash runs low.
Okay, so putting it all together, what's the verdict?
Well, we have explosive revenue growth, clear sector leadership based on real science breakthroughs, solid liquidity for now, and a packed schedule of potential high-impact catalysts, both confirmed and rumored.
Sounds pretty positive overall.
Our overall investment thesis, based on everything we've looked at, definitely lands in the bullish camp. We'd score it maybe an 8.5 out of 10.
An 8.5, that's quite strong. So how should someone think about approaching this?
I think the best approach here might be kind of dual-pronged. You could look at it short-term, trying to capitalize on that potential Q4 2025 catalyst schedule we talked about.
And longer term.
And longer-term, potentially benefiting from the compounding growth if they really drive adoption of this revolutionary tech in aviation and defense.
So the final thought for the listener.
Given the strong technological moat and that really concentrated schedule of potential catalysts coming up in late 2025 and early 2026, the critical decision for you isn't just about buying in, maybe. It's deciding if you're positioned to potentially benefit from, a major breakout event if one of those big partnership rumors finally hits, or if you'd rather wait and see if institutional money pushes the stock past that $16 resistance level after the news is already out.